welcome to Tuesday. And of course, every Tuesday, like normal, we go and review the New Zealand stock market, just the NZX50 to obviously get a gauge to see how that is going. So before I jump on, obviously this is general commentary. It's certainly not personalised advice or anything like that. If you're wanting personalised advice, you do need to go and speak to your own financial planner or share broker or someone else in that field. So let's jump on and share my screen. Great, so I've brought up the S&P NZX50, and the reason for those that I do show the NZX50 as opposed to anything else is simply because with the NZX50, they're the most liquid stocks on our stock market, and that's really what I want to obviously focus on. There are obviously every now and again some outliers that do really, really well. However, in my own experience with share trading is that they can be very, very illiquid, and quite often I've been in situations where a winning trade had ended up turning into a losing trade just simply because I couldn't get out when I wanted to. So this is why I've learned over my experience to just stick in the New Zealand market, especially to those stocks that are listed on the main board. So without that, as you can see here, I have jumped on, and the New Zealand stock market, whilst it ended down a little bit last week, you're only looking at about just over 1.5, so it's 1.76% drop in the market, which is really good. So nothing really to be concerned about. That's just normal. I always describe it to people. It's a bit like you're taking a breath in, because if I look at these green candles here, it's like you and I breathing, and you keep breathing out and you're growing. At some point you've got to take a breath in, and that's really what the market has done, in my opinion, last week. It's a little red candle there. There's not many wicks on or tails, and also there's very little volume. You can see down the bottom here that previous week we had a very good, strong positive green candle, and there was a lot of good volume in that on it, but so far as at the end of last week, very, very little. So it's nothing to concern me at all either. Just taking a look down to see how much volatility is in the market, because to me that's a very important gauge. And you can see here by this ATR, which stands for average trading range, it's been trading down, and now we're around 190 points, which means the market could move generally in a day about $1.90. Obviously there's always exceptions in that to that. But sorry, $190, not $1.90, $190. But it's nothing to be concerned about. And when I put it into a percentage, which is simply the ATR here divided by the share price, you're only looking at about 1.6% volatility. So that is in my view, very, very negligible. If that was up at 5%, then I would be starting to get a little bit cautious, just purely because the market could suddenly whipsaw one way or the other, and you could get caught out and even stopped out of positions that you perhaps want to stay in. So I tend to avoid the market if there is about 5% or more volatility. So there's not really a lot to report this week. On the market, I mean, it's in a good, strong position. We obviously haven't hit any recent highs or anything like that. As you can see here, the most recent high over the last 2 years was back in January last year, where the market was trading at about 2,100 points. So we haven't hit that yet. Over a 5-year period, we had a high here back in December 2020, and that was where it got slightly over 13,000 points. So we are a bit off those marks, but again, nothing to be too concerned about. This is just normal activity, in my opinion, with the share market. So that's enough for today. I'll stop sharing. So come back on Thursday and I will do a share and review. And yeah, see what you think. And yeah, I haven't made a decision as to what share it'll be, but come back and we will have a look. So enjoy your Tuesday. Thanks a lot.